Greetings, members, one and all of the Salivation Nation. Mixed messages from the Fed. Taper precious metals. Let's explore. The key word there being taper. Of course, when we talk about tapering, we're talking about the price. Precious metals themselves, well, we'll talk about that in a moment, because you can't taper the value of precious metals. This is from CNBC. A little bit of a mixed message from this article. Federal Reserve preparing for a taper this year, from the July minutes. Federal Reserve officials at their July meeting gathering plans to pull back the pace of their monthly bond purchases, likely before the end of the year. Meeting minutes released on Wednesday indicated, however, the summary of the July 27th through 28th Federal Open Market Committee gathering indicated that the central bankers wanted to be clear that the reduction or tapering of assets was not a precursor to an imminent rate hike. The minutes noted that some members preferred to wait until early 2022 to start tapering. Looking ahead, most participants noted that, provided that the economy were to evolve broadly as they anticipated, they judged that it would be appropriate to start reducing the pace of asset purchases this year, adding that the economy had reached its goal on inflation and was close to being satisfied with the progress of job growth. And there you go. So they have a goal of inflation now. That's pretty interesting. However, committee members broadly agreed that employment has not met the substantial further progress benchmark the Fed has set before it would consider raising rates. Addressing interest rate concerns, committee members also stressed that the need to reaffirm the absence of any mechanical link between the timing of tapering and that of eventual increase in the target range for the federal funds rate. Fed officials have said repeatedly that tapering will happen first, with interest rates unlikely until the process has been completed and the central bank isn't growing its balance sheet anymore. They're saying, 2023 is when they're thinking they would do the first interest rate hikes. But who knows? All that could change. Markets briefly rebounded after the minutes release, but then turned negative again, with the Dow Jones down more than 150 points as of the writing of this article. They voted at the meeting to keep short-term interest rates anchored near zero, while also expressing optimism about the pace of economic growth. While the message about tapering had been telegraphed, the Fed has a difficult communications job in making sure its strategy is clearly outlined. There are concerns in the market that the Fed might set its tapering pace on a strict course even if the economy soars, and that's just it. They release these minutes after there's a statement by the Fed, and sometimes it's two different messages, and that is, this article was published here Wednesday the 18th here, and today's the 19th, late, but the metals, they're kind of mixed here, but mostly down. Say for platinum is up. We're looking at the Asian markets because they're open, but gold is still down. Silver's down slightly. I mean, silver is flirting with high $22 now, $23.31 as of the recording of this video. There's been some downward momentum and all across. Even rhodium has taken a hit here, and but nonetheless, these are buying opportunities, I think. But if we do continue to see the interpretation of the Fed minutes and when they meet again, one thing I think we can all rest assured, or whether or not that's good or not, is if they do taper, it doesn't mean that the faucet's closing. It just means it's pulled back a little bit. It's still flowing. The money is still flowing. There's still quantitative easing going on. And it's tightening only slightly. The opening is narrowed a little bit, but there's still water coming out of the faucet. But the fact that they're not going to be raising rates, I think most of us agree that that's not going to happen anytime soon. And so, therefore, we just keep marching on. But what does this mean for precious metals? Well, I think it's going to be a point of unpredictability as to where they may go. Like I said, any downward movement from here, I see as a buying opportunity. I'm still bullish on both metals by the end of the year. It just seems like there can be one or two little needles that could come in and poke and prod a little bit at that bubble that can make the markets nervous, and therefore that could really jack up gold and silver and jack it up, without any real jack it up based off of emotion. The price is moving up because of a perceived threat to the economy, even if it's not realistic, where news could come the next day that can move them back the other direction. And but the thing is every time we see these moves upward or downward, it's a little harder to rebound, to kind of get back. But they do snap back, at least to some level, at some point. But there's new normals, and right now to see $25 silver would be kind of amazing at this point. But to see $28 silver almost doesn't seem possible before the end of the year, even though I predicted between $30 and $35 an ounce silver. Gold, well, if gold is hovering around the high 1780s, it's quite possible it could hit $1,800 again. Would not be surprised to see that, but it is more resilient. Hence, you can see the percentages there. Gold is a more resilient metal. This is one of the reasons why I've accumulated a bit more of it. But there are opportunities, probably better opportunities in some cases, for silver when it gets down that low. Then, nonetheless, there you have it, a little late night news for you in the markets. And let me know what your thoughts are as we move forward. Very emotional trading, but the fundamentals remain strong, and it's about a paradigm shift of thinking. When you stack precious metals and you have your budget, yes, we pay attention to price for sure. We have to some extent. But you look at really what is it about? It's about sound money. Sound money, whereas where you count your ounces, not its value or not its price. You account for silver and gold because of its value, not its price overall. And that's kind of how I look at them. Now, does that mean I want to pay an insane premium for silver? No. You got to be wise. You got to be smart, because those dollars mean something for everything else that you do in life in terms of expenditures economically. But in terms of sound money and the principles of sound money, those are measured in ounces, not price. So there you have it. Value added silver and gold. Post your thoughts in the comment section below. And I would extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.